Welcome to CEO Money. I'm Michael Yorba. I've got Eddie Tofpik, Head of Technical Analysis and Senior Markets Analyst for ADM Investor Services, Archers Daniels Midland International Limited. Eddie, welcome to the show. Thanks for coming, staying late at the office in London and talking to us. Appreciate it.
It's a pleasure. We're a 24-hour office, so though I won't be here all the time, I'm glad to be here this time, even though it's sort of slightly denuded, as you can see behind me.
I do. Well, at least you got the place to yourself for a minute.
Indeed.
All right, Eddie, let's get into what your take is on what you're seeing happening with the markets, both on the micro and a macro level, where you see things going. You want to start off with, say, anything exciting in the futures markets?
Well, surprisingly, I actually have been looking today at cocoa, both the London contract and the New York contract. And both of them are looking as if they're about to start a real second part of a move down. We've had the first portion of it in July. We may then have formed a bear flag, a sort of a halfway hesitation, pushed back up within a channel, and now we're coming back down again. The London contract, funnily enough, because of the sterling element, is actually leading it. So it's happening in there, but the contract in New York is actually pushing even sort of like further. It'll go further because it's got a lot to catch up with. So we've broken through some support around the 2210 area. We're probably going to hit some support around about 2150, but we're in fairly free territory. And the reason that's actually interesting is on the Monday we had a key reversal, a high, a low, and above two previous closes, and it failed. It turned around yesterday and today, and we're actually making a new recent low for September, and we're going to be testing, I think, the lows in August if we carry on this way.
Now, do you want to purely keep the conversation technical, or do you have any fundamentals that you'd like to bring out about this pullback?
Please don't use the F word. Please don't use the F word. No fundamentals, please. I'm a pure technician. That's what I believe is actually the thing that drives the market. Everything else follows on.
You're talking to the right guy, because I've been a technician since 1980. We're on the same page. Okay, cocoa. So we covered that. Further downside, any other markets you're looking at?
Yes, looking at cotton. Now, that's a not dissimilar market in many ways. It's had a halfway hesitation action. It legged down last week, and then it stopped. And the reason it stopped is a very old Fibonacci level, a 61.8 Fibonacci level at 77.79, and it stayed there, but it's not turning down. So actually one of the ones that actually may be turning slightly bullish in there. It's still overall a bear market. It's below the long moving average, below the medium moving average, below all the channel lines we've got. But it's actually, I think, overextended on the downside, needs to pull back up a bit. And so there's an opportunity there for a nice move up, maybe something in order to about 81. Something like that. The ones that are really interesting, I think, is some of the energy markets. I looked at crude oil, and we've seen from the fundamental side so many people saying, oh, we've got to get crude oil, it's over $80. Well, actually 80.50 was the key level on that one, and we did pop over it. But WTI, the front month continuation, is that's on the Brent contract, is actually coming back down again. We're trading. We had a thing called a doji cross yesterday, a high, a low, and the open at the same level as the close. That's a sign of indecision, and it may be that we're actually looking to see now a pullback down. It's not going to be a great pullback down because overall the trend is still for a higher market, but it's a pullback down to maybe some support. And I'd look to say something in the order about a 69.50, 69.25 area. There might be some support around there. There's obviously interim support, but the best stuff is at 69.50 at the moment. The other contracts which are quite interesting is the big move down in sugar that we've seen. Now, I'm well documented for saying that sugar should be going down to, let's see, my ex-target is 8.35. 8.35 at the beginning of this year, I turned around and said it's likely to go down to 8.35 on the longer term chart. And I was really worried that I would actually upset a lot of people and say it, because that's actually not really where I think it's going to. I think it's going to go further. But 8.35 was my initial. Now we're coming into Sugar Week in London, where the whole industry, which goes into Brazil or into London biannually. So last year it was Brazil. This year it's London. It's coming back in here. That's coming up in a few weeks' time. And we've had a big move up, a surge people trying to think the funds are actually going to be squaring up, but actually all they did was actually add fresh positions, and we're testing the previous low back in August, and that's looking as if it may go even further down. And my actual target is still 835. I think there'll be opportunities. The next big opportunity is in 2 weeks on a Monday, when there's a crossover of some of the channel lines, and that usually indicates volatility, a change in trend, or a reinforcement of a trend. One or all of those three actually could happen. So in 2 weeks' time, not this Monday coming, but the Monday after, I think there may be an interesting opportunity there in sugar. Now, looking at some of the other commodities, LME copper. Now, I look at the LME copper chart, and we had a little chat off camera that we were looking at the lumber market, which I don't really follow, but also the copper market on COMEX, that it looks like it may be heading down. It still looks like it's heading down. Now, the LME contract's trading at the moment around 62.85. I think it could be down to about another $1,000 it could lose a ton. Down to sort of 5,300, because that's the target on the downside. The problem is there's a target also on the upside, and it's not very far away from there. That's around about the 6,500 level. It could actually reach back up and then come back down, and we won't then go down to 5,300. But it's yet to see on that.
Yeah, I'm looking at my charts on the copper, and it seems to me it just bounced today. It just bounced off of the 50 period average. It's below the 20, and it's found some support at the 200 period. That's just super simple stuff that I work with. But I agree with you 100%, and that makes me wonder about the global economies as a whole when you have a pullback in the copper market. That's a conversation for another day. But I'm on page with you. Please continue. I'm fascinated.
Why, the last week, I noticed something which has actually been very much in the China picture, which is the soybean complex, and it was a move up in soybean oil. Now, it had been reflected in meal. Meal had gone basically sideways and started to go lower. Soybeans overall have been very volatile. But there was a weekly key reversal, a higher, lower, and above 2 weeks as a close on Friday. And you don't see those sort of things often. And the other thing is, you shouldn't expect an immediate move up on the back of that, because that's a weekly move. So therefore, you could expect a pullback for a couple of weeks or maybe 3 weeks, and then the beginning of a start of a growth of a picture. But soybean oil has had a nice move up this week, and it's continued, and it's testing some of the resistance that we've had from previous weeks. If you look at it's around about a 28.80 to 29.10 areas where the top of the market in recent times has been, and it's moved up. But that's not the key. There's something that you and I will know about, and there are people out there who will never even believe this. The 21st century uptrend. There's an uptrend from the beginning of the 21st century, which runs through the bottom of this market, and it runs through currently at, let me just get a quick value of it. It runs through at 27.77, funnily enough. Now, we've gone below it, but this is there's people in my back office in various markets or whatever who haven't been even born. They're probably in kindergarten and who are on trading desks now when this uptrend started. And this is a major thing that's going on. I think the soybean oil market is actually starting to show what's happening in the rest of the bean complex, the whole crush itself, and starting to see a beginning of a move up there. And that's actually really, really interesting, I think, as well.
Let me get your impression of the commodity sector as a whole. Do you see that?
Using computers, we can look at charts now. I still remember writing, as you do, on paper, doing little point and figure charts and things with very fine paper, very special paper, and very fine pencils.
10 by 10 grid and 8 by 8 for the bonds. Yeah, I did it. Actually, just a little known fact that most people don't know, because the Japanese taught the candlestick, the Nahabashi and the Hayashi systems to me prior to. I forget what his name is right now, writing the book, and it was about, 5 or 6 years before he even started to, Neeson, writing the book. Steve Neeson, yeah, and I happen to know him too, but anyway, they're not Japanese. I mean, that they're Egyptian. The Chinese
So
got them
that's
from
no
the
Egyptian.
Egyptian, and then the Japanese got them from the Chinese. That's the true origin of those candlesticks.
Well, I didn't realize that, but I can tell you this. Munesh Sharma was worth, in modern terms, I think it was about $1.5 billion. He developed he was a HFT trader. He was a high-frequency trader of his time. He developed a series of the equivalent of Pony Express between Osaka, I think it was, and Tokyo or somewhere, which was to do with the rice futures market that had started up at that point. And these guys had little pieces of paper, rice paper, with the prices on them in the different markets, and they literally just rode for X amount of miles, handed it to the next guy as the horse was getting tired. He had a fresh horse, went on to the next one, went on to the next one. And he was able to have prices in different centers before anybody else. And if that isn't high frequency trading, I don't know what else is.
That's good. All right, Eddie, I'm glad to have you on the show. I hope to do this more often with you. You and I, we're a kindred spirit on this topic here.
Thank you very much indeed. It's been an absolute pleasure.
You're good. Don't hang up. I want to talk to you offline after the show.
Thank you.
You're welcome. All right, you've been watching CEO Money with Michael Yorba. Thanks for joining with us. Like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel.